provided by FFMGI. Visit us at ffmgi.com to learn more about finance. Best way to finance a 15K loan for home improvements. If you want to make home improvements but don't want to take out a HELOC, the best option is a personal loan. These loans are easier to get, and are available to people with all kinds of credit. If you're interested in applying for one, you should find a lender that allows all credit types. Read on to learn how to get the best deal on a 15K loan for home improvements. Personal loans are more accessible than HELOCs. Although personal loans are more accessible than home equity lines of credit, home improvement loans still have their advantages. For example, they often come with lower interest rates than HELOCs, and are easier to get if you have good credit and steady employment. Even if you have bad credit, personal loans are an option that can help you complete your home improvement project. HELOCs require a certain amount of equity in your home, and a recent home buyer may not have enough equity to qualify. In addition, HELOCs may have higher upfront costs, which are deducted from your line of credit at loan closing. You should always compare the fees and terms of different HELOCs before deciding which one is right for you. For a 15K home improvement loan, a personal loan might be a better option. Personal loans are available through banks, credit unions, and online lenders. They can be used for many purposes, including large purchases, debt consolidation, and home improvement projects. While community banks and large banks generally prefer borrowers with excellent credit scores and good income, borrowers with fair to poor credit can still qualify for a personal loan. Personal loans have the advantage of being more flexible. HELOCs are more restrictive and expensive than personal loans, but they're a great option if you don't have enough equity in your home. Personal loans are easier to apply for than HELOCs. Personal loans can be processed much more quickly, without the tedious process of a home equity appraisal. Although home equity loans offer lower interest rates and longer payoff periods, they do require a lot of collateral. The downside of HELOCs is that they're more risky. In addition, they usually require higher credit scores and have more paperwork than personal loans. In addition, home equity loans require you to give up your home as collateral. Online lenders can help all credit types qualify for a $15,000 personal loan. If you are looking to make home improvements, but don't have equity in your house, you can qualify for a personal loan for $15,000 and make the improvements you need. Personal loans are issued based on the borrower's creditworthiness, so the amount may vary depending on the credit score and other qualifying factors. Some lenders perform soft credit checks, which don't impact your score. Be aware that you and your co-applicant will have different interest rates and terms, especially if you are applying jointly. The total cost of a $15,000 personal loan will depend on the length of the loan and interest rate. The lender must disclose the interest rate and terms of the loan before offering the loan. Consumers with good credit can qualify for the lowest interest rates. On the other hand, borrowers with average credit may have to pay higher interest rates. Another option for homeowners looking for home improvement loans is Prosper. This online lender specializes in small home improvements loans, and borrowers can apply with a fair credit history. Repayment terms are fixed at 3 or 5 years. This means that if you miss a payment, your home won't be at risk. However, be aware that these loans tend to carry higher interest rates than home equity loans. If you are looking for a $15,000 personal loan for home improvement, make sure to calculate the amount of money you'll need. Be sure to account for the materials, contractor fees, and other expenses you'll incur when working on your home improvement project. Remember, home improvement loans shouldn't put a strain on your credit score, so be cautious about overborrowing. Before applying for a loan, compare different loan options to find the best loan terms and the lowest APR. Personal loans can also help you consolidate debt. These loans can help you make a payment on expensive debt. If you have multiple credit cards or high interest balances, personal loans are a great way to consolidate these loans into one low monthly payment. They also come with fixed repayment terms, which makes it easier to fit home improvement spending into your monthly budget. Getting the best deal on a home improvement loan. If you're looking to improve the look of your home, a home improvement loan may be exactly what you need. It's easy to apply for one of these loans and get the money you need within days. You'll be able to pay off the loan with fixed monthly repayments that don't increase over time. You can choose a loan period from 1 to 7 years, and choose the amount you borrow, but you need to make sure you can comfortably pay it back. The average APR of home improvement loans is 3 to 36%. However, the actual rate may be higher or lower depending on several factors. Generally, The best rates are reserved for customers with the highest credit scores. If your credit score is low, you may not be able to qualify for a home improvement loan at all. Obtaining a home improvement loan requires a minimum credit score of 585 to 700. This means you need to pay down any outstanding debts first. You can also take out an unsecured home equity line of credit. The difference is that a home improvement loan is disbursed in a lump sum, while a home equity line of credit allows you to withdraw a certain amount as you need it. The interest rate on an unsecured 15K home improvement loan is generally lower than that of a secured loan. A secured home improvement loan requires the borrower to place something of value as collateral. This means that you may risk losing your home if you fail to repay the loan. Before deciding which home improvement loan is best for you, do some comparison shopping and research. Check out websites like HomeAdvisor to get a range of project costs. You may also want to consult a contractor, as they often offer financing programs. When looking for a loan, make sure to compare interest rates and fees between different lenders. The next step to getting the best deal on a 15K home improvement loan is to choose the type of loan you need. If you have enough equity in your home, a HELOC is the best option for you. A HELOC allows you to borrow up to 85% of the value of your home. In addition, HELOCs allow you to pay back the loan in stages if you need to. Getting a fixed interest rate on a home improvement loan. If you're planning on making some improvements to your home, getting a loan with a fixed interest rate may be the best option. These loans are easy to obtain and you can have the money in your bank account in as little as 24 hours. Fixed interest rates also make it easier to budget your monthly repayments. The repayment period is usually 1 to 7 years, depending on your circumstances. You can borrow up to $15,000, but make sure that you can afford the monthly repayments. The best home improvement loans have an APR that ranges from 3 to 36%. The rate you'll actually get will depend on several factors, including your credit score. If you have a low credit score, you're unlikely to qualify for the lowest interest rates. You can get home improvement loans with fixed interest rates from banks and financial institutions. You can even get these loans without pledging your home as collateral. The main benefit of home equity loans is that they allow you to tap into the equity in your home, which can reduce your monthly payments. However, before a lender will approve your loan, they will need to see your property's value. Another popular option for homeowners looking for a home improvement loan is a home equity line of credit, HELOC, which allows you to borrow up to 85% of the value of your home. Home equity loans are best for people who have a good amount of equity in their homes and don't know how much home improvement will cost. The good thing about HELOC loans is that they can be repaid over time, so they are a great option for those who want to renovate their home. A home improvement loan calculator is a helpful tool for comparing loan options. These calculators will summarize what your payments will be and provide an effective APR and monthly payment. In addition, they allow you to adjust the first payment and amortization schedule.